The Gwart Show is sponsored by Ellipsis Labs. Ellipsis Labs is building a world where mainstream finance happens on-chain. Their first product, Phoenix, is a fully on-chain limit order book DEX on Solana doing hundreds of millions of dollars in volume. I know this team personally. It's one of the strongest in the space. If you're interested in working with a team that's here to stay, Ellipsis Labs is hiring engineers passionate about DeFi to join their team. You can find Ellipsis Labs on Twitter at ellipsis_labs or head to ellipsislabs.xyz to learn more and apply.
Hey guys, today we're here with Checkmate. This is probably a bit unique in terms of the episodes that I do because there seems to be some despair in the crypto and Bitcoin markets right now, and I wanted to get an opinion from somebody who follows this stuff very closely and well-known on Twitter, well-known in Bitcoin, and I'm happy to have him here. Checkmate, if you want to introduce yourself and tell us a little bit what you do.
G'day, mate. Thanks for having me on. It's good to finally meet the man behind the Gwart troll. I love it. So I mean, my background, I used to be a civil engineer, designed tunnels, basements, roads, anything under the ground, really, which is an interesting field because you get what Mother Nature gives you. You don't get to put steel and concrete where you want. You get the rock, soil, and everything. So you get to deal with probability and uncertainty quite a bit. And that's really the natural progression into markets. I think that's why markets really fascinated me, because I spent so much time with risk and, stuff that you can't control, incomplete information, but at the same time needing to have a thesis. And markets just really resonated with me on that front. I found Bitcoin in 2018 after buying the absolute Pico top in 2017. You actually couldn't have bought higher than me. Even if I think Coinbase had an extra fee for Australian dollars, which essentially meant that my top cost basis is above the top of the candle. So anyway, that was my kind of initial entry, paid my tuition all the way down and, turned 10K into 10 cents. And then eventually I learned about on-chain data in late 2018, which is really when it started to grow up, right? The earliest metrics. And I just became fascinated with it because now I can, visualize, pull it into a CSV, into a spreadsheet, start visualizing how the market trades and moves and different people's cost bases. And it fascinated me, right? It kind of melded that world of big data and also what's going on with markets. Plus, I just became absolutely fascinated by Bitcoin. I held a portfolio of shitcoins, and I've kind of gone through the journey of working out, okay, maybe I don't need these 50 rows in my portfolio spreadsheet. Maybe I need like 10. You know what? I don't really like these ones. And eventually, slowly but surely, it whittled down. And eventually, I got to the point where I just had Bitcoin and Ethereum through the 2021-22 cycle. And at that point, I was really flip-flopping over and over. And I released a report recently called the flip-floppening, which is essentially my journey from, thinking Ethereum was the best thing since sliced bread to finally going, I just can't make the two ends of this puzzle meet, right? I'm just missing 5 or 6 pieces here, and I think I want to put this thing in the bin. So eventually, after the merge, I bailed on that position. I'll be more or less Bitcoin only. People make fun of me for holding gold still, but you need something else in the portfolio. But anyway, in 2021, I joined Glassnode as their lead analyst, lead and only analyst at the time. I think I was employee number 8. From there, we built the analyst team, started writing the Week on Chain, which is kind of the flagship newsletter, and did that for about 3.5 years, which is absolutely fantastic. And then I just got this urge that it was time for me to take my skills and not only just like the analysis skills and the study of Bitcoin, but actually run my own business, right? There's like the personal challenge of doing that. So that was the next step. And Check on Chain is the product of that. It's essentially a charting suite, on-chain analysis newsletter on Substack and, running my own business. So it's been a fun journey so far.
What is your actual product primarily, like in terms of what you release, and what are you looking at? Like, assume I know nothing about this, which is also true that I know nothing about this, but talk to me about what you look at and then your actual.
Yeah, so on-chain analysis, and it particularly works for Bitcoin because Bitcoin has a very grassroots origin story, very, very retail driven at the start, and then we're starting to get to that institutional phase. So what we've really seen is on-chain data is the human emotional state. So what do I mean by that? Well, as we all know, most people can't trade, right? Most people buy high and sell low. They go through the same hodler's journey that I did. And that's true always. That's in every asset. The only difference with Bitcoin is that we can see it. We can see when people take profit, and particularly when people who held their coins for 3 or 4 years, we can see when old coins start moving. we can see when new money comes in and buys high, holds those coins until the absolute bottom of the dip, and they all capitulate at the same time. So when you're looking at on-chain data, you're looking for cross-sections of people doing things, right? Buying high, selling low, accumulating at bottoms, whatever it is. And the idea is that because Bitcoin is so organic, we get very, very clean and crisp pictures. There's not like coins going into liquidity pools and, they're not trading also. It's very clean data. At times, 80% of Bitcoin's on-chain volume are coins going in or out of exchanges. People don't realize this, but there's like multiple billions of dollars of deposits and billions of dollars of withdrawals every single day. And every single one of those coins carries a signature. Who held it? How long do they hold it for? What was their cost basis? When did they buy it? How did they lock in a profit? Did they lock in a loss? All that information we can essentially extract and pass and turn into useful insights. So essentially, my general view, and part of the newsletter that I write is my journey. It's how I get my thoughts down on paper. It's how I explore the concepts. And essentially, I realized that most people come into the industry just like I did. They want to be a trader, right? And they get blown up on perps 50 times, and they realize that, this is just not good for my mental psyche. And most people eventually just become the hodler. They're still fascinated by the market. They want to understand what happens. They want to understand the volatility. I'm a big advocate for if you understand why the market traded lower and you prepared for it before that happens. Like if Bitcoin sold down to 40K, I would be not that phased because I kind of expect that something like that it's on the cards, right? And I released a report recently saying that it's a feasible thing for the near future. So when it happens, rather than waking up and going, holy shit, what just happened? And panicking, you're like, well, I'm kind of anticipating this. I don't know what the future is going to be, but I'm prepared for it. So when that happens, you can make a decision. So essentially, our tagline is we're your Bitcoin personal trainer, right? Because the idea is that you're just preparing for the future. You're not trying to predict it. You're just preparing for it, and that helps people hodl at the end of the day. Helps people understand where they're at. So the Substack's kind of how I get my thoughts out. There's a charting suite which is all free as well, but that's kind of the combined story, right? So we're just trying to explore what's going on using the data that's inside Bitcoin itself.
Do you target a lot of your work at the individual hodler, or are you also targeting this towards institutions and then active funds and hedge funds and so on and so forth? What is your model in terms of who is your kind of target customer in that sense?
So my target customer, the person who produces the Check on Chain newsletter is Check the Analyst. And he writes that newsletter for Check the Hodler, right? Which is my two kind of personas, because that's essentially, I write for myself to get my thoughts out. I'm fortunate that many folks seem to like when what Check the Analyst writes, because they're also Check the Hodler. So in many ways, I write for me, and I think that cross section. And I've been thinking about this quite a bit recently. Is who is the Bitcoiner in the world? Disproportionately, if you look at I'm sure your podcast stats would say similar. YouTube, it's millennials. It's just like a big ball of millennials with a couple of boomers at the tail and a couple of Gen Z on the other side. So who are those people, right? They're moving into this era where they've been in this market for a couple of years. They've accumulated coins for a while. They've dealt with all the FUD. They've kind of survived so far. And they're probably not there yet, but they can probably foresee that in one or two cycles, they'll be there, right? They'll be at a point where they're like, you know what? I made it. I was right, and I'm good. All I need to do is get through those next two cycles. So that's my persona who I write for. Now, that said, in all my time at Glassnode and all my experience kind of talking to institutions and hedge funds, what I've noticed is that this industry is so much further ahead than where these guys are. They don't know what these metrics do. They don't know how Bitcoin trades. They don't have any of these ideas. So in many ways, they have to also go through the hodler's journey. And a great anecdote for this, right? What did I do when I first entered this market? I bought a bunch of Bitcoin and it sold off. And immediately on the first bounce, I'm like, okay, I've got to buy some Ethereum. So I trade my Bitcoin for Ethereum. It goes down more. I get another bounce. I trade all of that for shitcoins. They go down to zero. Institutions, and I've heard this from many, many people this cycle, were fully allocated to Ethereum from the bottom because they expected the game to play out the same way it always does, which is Bitcoin, Ethereum, alts. And what happened? Bitcoin memes. And that's it. So all these guys got left on the sidelines. So in many ways, the journey of the hodler and the stuff that I write is actually suitable for everyone because no one knows what the hell is going on. And I'm a big advocate for like, the first thing I say is I have no idea what the future holds. Most of these guys are trying to predict what's going on. I just think it's a fruitless venture. What you want to do is understand the broader macro like view. What is Bitcoin doing? What is the climate and the weather under the surface? And then make those decisions from there.
Yeah, I'm very much in agreement that nobody knows what they're doing. This is like
It's
always
great.
been, yeah. Like if you hold this like with high conviction, it makes things a lot easier, I think.
You just have to accept that you don't know, and no one does. And once you like let go of like, I need to know the future, and I've got this line, right? It's like, I can't predict the future, but I can prepare for it. That's the way that I like to look at things.
Okay, so then on that note, what is happening in the market right now, right? I have like a few points I wanted to touch on. Germany is selling other coins. Everyone's mad at Germany for dumping all their coins in the market. We have some counteracting of that with ETF flows. That's encouraging. And then the halvening. So whatever you want to kind of like run with, I want to hear what your overarching thoughts are right now on the market.
Sure. So in terms of sentiment and having been here for a couple of cycles, this feels a lot like 2019. And I think a lot of people, when they hear that, they immediately look at March 2020 and they're like, holy shit, sell everything. But like 2019 was quite clearly not in March 2020, right? They're two different years. The environment that we went through in 2019, even 2016, 2023, what are these periods? They're very slow, stable, boring grinds higher. And in many ways, like if you just zoom out, look at the weekly, the monthly chart, it's a big ass grinding higher. We go up, we go sideways, we go up, we go sideways. Another big advocate, I'm a big fan of like markets have to go down to go up. And I know this sounds really counterintuitive and very hand wavy, but markets have to go down to go up because if they just go up in a straight line, they come down in a straight line, right? Having these like periods of rest and recuperation, markets are still subject to the forces of gravity. So in many ways, this correction at the moment, it actually feels very healthy, very constructive. Even if we go lower, it's doing what it needs to do, which is giving the market time to reset. The number one catalyst that will send the market higher is it going lower because people have the hodlers can buy more, right? And they just take coins off the people who don't want to see the end of the movie. Now, who doesn't want to see the end of the movie? Well, the German government clearly doesn't want to see the end of this film. They're basically bailing everything out. It's been actually quite astounding. There's two things. They've sold, I actually can't even remember what the total number is, but tens of thousands of Bitcoin. And we're down, 24%? Like, shit, we're down, but come on, guys, that's a lot of absorption. Like, let's be real here. There's also a bunch of people front running, being like, oh no, Mt. Gox, $9 billion worth of headline sell side. It's like, these guys, there's two types of people in the Mt. Gox creditor pool. People who've already sold their claims or people who have battled and fought off aggressive people trying to buy their claims for years, for a decade. They didn't sell their claims for cents on the dollar. Do I really think that they're sitting there being like, no, I'm not buying any more Bitcoin until I get my Mt. Gox coins back? No, these guys have been stacking sats like the rest of us. They got coins from yesterday. They're not worried about their Mt. Gox. That's like a bonus. So I think the fear over these big sellers, and it is real. Miners are under stress. Miners are selling. German government's just market selling a bunch, which, by the way, in 2019, we went up from 4K to 14K because there was the plus token Ponzi. There was this Ponzi scheme going on over in China. It sucked up like 2% of the Bitcoin supply. And in July, when we peaked, the CCP actually arrested the guys and took their coins. And then they started market selling. So I wrote about this the other day. It's very, very 2019. You've got governments on the sell side. You've got miners who are still stressed because they bought too many machines. And yet the market is just kind of chopping around in this really healthy range. So, it's there. The sell side, we're not going to all-time highs tomorrow. But at the same time, it's like, I think there's a lot of bearishness given the fact that we're down 25% and normally we're down 30, 40.
What do you think? Okay, so what do you think that bearishness is a result of? Like, obviously, me following maybe some of the altcoin markets more closely, like I have some thoughts on this, but I'm curious why, like since March, when Bitcoin made an all-time high, right? It's been, as you say, choppy, grinding down, grinding up. Not like extreme movements, right? Like not like the FTX, right? This has not been that, but it seems like there's like an intense feeling of despair and uneasiness. Is this maybe less so in Bitcoin circles? I will concede that, but like, what are your thoughts on like why everyone seems so upset right now?
Yeah, this is. And we were talking a little bit about this before we hit record, but
Yeah.
I call this period chop solidation because it's just enough red candles to get the bears super excited and the bulls nice and depressed, and then just enough green candles to get the bulls excited for all-time highs and the bears squeezed out. And if you close your eyes for 6 months, you're at the exact same price, and there's bodies of traders lining the road that we got there. So that's kind of what the environment that feels like we're in. Now, time pain is what I call it, is essentially duration. We trade sideways and we chop around. And time pain is a really, really hard thing for people to deal with in markets. When it just sells off, it's like a shock to the system. But like within a week or so, you acclimatize and you get used to it. Sideways grinds where it goes nowhere, which, by the way, Bitcoin spends most of its time doing, is absolutely brutal. Because you're just waiting and you're like, but I've got this thesis and Bitcoin's like the best money of all time. Why isn't it $1 million? I deserve 100K. And the market is not an ATM. And too many people believe that the market is just, it does what you think it should do. The market is just, it's like the tide. It just is. You just have to exist within it and survive within it. If you swim against it, you're going to drown. That's just the way it works. And usually markets will go sideways and down just long enough to shake out everybody who doesn't want to see the end of the movie. That's just how they work. And when you're all flushed out, that's when it starts moving higher. It's like the nature of the beast. Now, I think there is another element here. And you mentioned the altcoin side of the equation. And I've divested from my alts. I think the merge was actually, shortly after the merge, was when I just purged everything. I'm like, I'm good. I just don't need any of this shit anymore. And what I haven't done, and I kind of purge my feed as well. Like I don't particularly care what Ethereum's doing. I don't care what Solana's doing. I occasionally get like a peek behind the curtain where like you see an influencer and you like go into their comments and every looking like, God damn, like I know people are bearish, but like in the Bitcoin world, yeah, we're down 25, we're down 30. Most of us are used to waiting. But if you peer behind the altcoin curtain, people are getting minced. I'll look at some of the charts. I'm like, holy shit, what is going on? And you realize that there's an absolute forest fire that I just didn't realize was going on. And I think my instinct is that the bearishness is coming from two things: the boredom, but that I've increasingly come to the realization that's probably not the number one factor. I think the number one factor is everybody was expecting the same movie as last time, which is that we get this capital waterfall: Bitcoin, Ethereum's, L1s, DeFi, NFTs, and then the furthest path, which is memes. And I think that a lot of people positioned for that rotation, expecting Ethereum would run faster. They missed Solana because it ran faster than that. Then they jumped onto the Solana train and they were expecting, Solana DeFi, but no. Geo Bowden went, right? And the problem with those things, unless you're in the right Telegram group, you ain't catching that trade, right? You're just not going to be there. I gave up long ago trying to like pick shit coins. I can't do it. It's not one of my skills. So don't listen to me on it. But my instinct is that too many people expected the same movie and they got a barbell of Bitcoin and memes and they weren't prepared for it. And then when they did finally rotate all their shit coins and their Bitcoin into memes, the memes started selling off. So I think everyone's just been absolutely wrecked. Because they thought it was going to play out the same way. And like the rules, it feels different this cycle. There's something about it that is unique in the alt space, and I don't think it's good.
Yeah, okay, I wanted to get into that. Like, there's obviously this, cautionary tale to not say this time is different. You and I were chatting beforehand. Could this time be different? Yeah, like maybe just ramble on that. Well, first of all, there is one thing that is uniquely different. That's that Bitcoin made an all-time high before the halving played out. So like I think this has been attributed to sort of these ETF inflows, but this is unique. What else would you say? You kind of touched on it, but I just would love to hear you screech more if possible. Like what do you think is different now?
Yeah, so in the alt space, my instinct is that people went straight, like in 2021, we had the perfect capital waterfall, and the final play in that show was NFTs, right? Monkey JPEGs, which the TradFi world simply can't wrap their head around. Bitcoiners can't wrap their head around it. Why would people pay ridiculous sums for a picture of an ape, right? And it really is. It's a joke, right? At the end of the day, it's a joke. And in this cycle, people just jumped straight to that end result. They kind of front ran the whole thing. And I respect and I really enjoy kind of thinking through Travis Kling's thesis, this idea that like this stuff is going to rally without any pretense that it's ever going to do anything ever. right? And it's kind of the full acceptance that I've got these two theses running. One, I think Travis is right. There is most definitely this like financial nihilism component, which is like, you know, what am I going to do with this $500? I can go to the sports races, right? I can punt it on the slots, or I can buy a shitcoin that's like coin number 6,500 that was minted yesterday and hope that it does 100x, right? It's about the same odds. That $500 was never going to change my life, but neither is $5,000. And that's like the crux of this thing. So I really think that thesis has a lot to do with it. But then I've also got this other competing thesis that I'm trying to work my way through. And that is, well, think about the energy of boomers and their houses and inflated stocks just saying to the millennials, what's wrong? Why don't you want to buy my shitcoin? Like, come on, it's a good price. You want to buy it up here. Come on, it's good. Take my exit liquidity. And millennials are like, fuck off. Like, I don't want to buy your overinflated stocks. Like, I don't want any of this shit. The same energy is crypto natives saying to whoever the next marginal buyer is, come on, you really want to buy some Pepe? Come on, it's good up here at $1. It's the same energy. And I can't help but feel that we're getting to the point where we've exhausted. If you think about people who are going to come into this industry, and when I say crypto natives, if you're walking around with a hardware wallet and you're punting around on any, like you're using MetaMask, you're a crypto native. Try asking anybody who you've been trying to convince to use crypto ever, to use any of that shit, and watch them absolutely miserably fail. I know there's a learning journey, but I can't help but feel that we're getting very close to exhausting the number of people who are ever going to do that, because the user experience is truly horrific. It just is truly horrific. And I can't help but feel that we're asking those people to go on Coinbase and buy Pepe at an inflated price. And I just don't think it's there. And, you know, look at the middle of DeFi. Do you need the token? This has always been the theme, but I think the like mask off moment is here, where we've accepted that none of this shit does anything. So then it actually becomes very hard to pitch it. So yes, we've accepted that there is nothing here, thus we go to memes. But I also think that, like, at the end of the day, how do you get another buyer for that once that mask moment is off? I think it's kind of capped the inflows.
Yeah, like I've used to joke that maybe the total addressable market of DeFi was the people currently in DeFi, right?
Yes,
like, that was the
100%.
That was the old. But I'm maybe a little bit more open. I would say this, like, I generally agree that the tokens don't need to exist. I think, in fact, the tokens are not like in the vision of what we're trying to build here. Like, in many ways, these tokens create moats. They create businesses out of what should be open protocols, right? And so, like, in a sense, they re-centralize what could be decentralized. It's kind of funny too, because like Vitalik, and he's spot on about this, he says that like the most decentralized version of a protocol is one that is not governed by tokens, right? But like, ironically, almost 100% of these protocols have tokens. So it's kind of, I've always like wondered about this myself. And I think that this is like maybe what I'm trying to figure out now. You see all of these protocols launching that, like outrageous valuations, right? And especially like these new L1s and these new DeFi projects. And, you know, with the entrance of this big meme cycle, like, it's very difficult to figure out who's going to buy these things at $5 and $10 billion valuations. And like, I mean, like, I don't know, you talk to like institutions, like you're very much like up there in terms of people who are like, you know, right in the middle of talking to the important people buying our coins, mostly Bitcoin, right? But like, do these people, are they interested in this stuff? Like from your angle?
So I think they are verging on were. So if I roll back the clock 2 or 3 years, last cycle, yes, there was demand for this stuff. This cycle, there's been, I mean, at least from my perspective, there's been virtually no demand for Ethereum. It's all been people want Solana because it's the next thing that's moving, right? Which makes sense. So, but in terms of like DeFi stuff, no, memes too small for them to worry about. So I think they're going through their hodler's journey. They're also in 2019. They're going through this phase that I went through, which is that I just don't really. The more I think about this space, and the more my portfolio goes red because I bought this stuff, the more I think about why did I buy it, and then I realize, oh, I actually don't need this in the first place. And there's been a couple of examples here that I think have been real milestones I've been around the industry long enough to have seen the journey. I've benefited from several of the Ethereum airdrops, right? The ENSs, and I can't remember, there's a bunch of others. These ones that came out and it was like several $1,000s, right? It was meaningful money. Then I look at this cycle and, I punted a little bit on Solana just to test it out and see how it all works. And I did a couple of these airdrop things and I got $50, $100, like $35. And I'm like, it didn't even really pay for my time to worry about this shit. So there's the marginal rewards I was actually getting. I'm like, I'm good. And then there was another one, which was, I had a good laugh when it happened. You've got the eigenlayer thing where it's like the most regulated locked token. Come on, guys, it's over. It's over. And there were so many people who were pitching. That's the next big thing. That's what's going to bring Ethereum back onto the map. It's either that or L2s, and both of those have been interesting stories. Eigenlayer is like a locked token. What do they call it? Intersubjective work token or some bullshit. And they've got a 5,000-page document explaining why you can't read this white paper, you should buy this thing. Oh, by the way, and you can't actually sell it because we want to make you a community member right off the bat. There's all these different elements where it's like, is that really the world that we're in? Oh, and we're going to anyone's using a VPN or in the US, you're blocked out as well. And then on the L2s, there's this, I love watching this. People always say that, all these L1s are parasitic, right? They're competing for market share from Ethereum. So Ethereum goes, okay, cool. We can't scale, so let's launch all these L2s, which, by the way, I believe layered scaling is the correct approach. But the problem is that if you've got a blockchain which doesn't scale, because blockchains don't scale, why are we scaling it with another blockchain which also doesn't scale? So there's that component. Never mind the headache and ball ache of bridging. And at the end of the day, who's the bridge? It's Binance and Coinbase. So your DeFi system is 100% reliant on stables. Your bridges are 100% reliant on centralized exchanges. And even once you get onto the L2s, let's face it, Base is Coinbase, guys. It's Coinbase. It's not anything else. It's just an extension of Coinbase. These L2s are parasitic because they launched their own token, right? They're trying to attract market. They're just L1s that you allowed into your camp. So I just look at all these dynamics and I'm like, you guys are just looking for a problem to solve at this point. And the other thing I find interesting is if Ethereum is the Las Vegas Strip, all these L2s are just like the side back alley where, it's not Caligula's, it's some other, lesser known Roman emperor. And you're like, these casinos are just super seedy. They're just the same thing, but less liquidity, less good. And I just look at all these components and the airdrops aren't working. The NFTs are, Bored apes have fallen through the floor. So NFTs are getting crushed. L2s are parasitic. Eigenlayers locked forever. It's where do you go from here? I don't know.
Thanks for listening to The Gwart Show on the Blockspace Podcast Network. Subscribe to our newsletter at blockspace.media to get the show directly to your inbox. Show links, transcripts, and Bitcoin articles twice per week. Stay ahead of the conversation by visiting blockspace.media.
Is there anything that you would like to see brought to Bitcoin then? Having now witnessed this for, 5 years.
So my view on, if I really take a big picture view, what did I use Ethereum for back in the day? I used it to borrow money, stables, to then bet on more tokens, right? Primarily ETH. I put it in a vault, I borrow capital, I buy more collateral, I stick it in the vault, and I ride the wave. It was leverage. It was just leverage to speculate, which is fine. That's what I used it for. But I realized in that journey that without USDT and USDC or some centrally issued stablecoin, we found out what happens when you try and do it without that with Luna. Without those centralized entities, none of this stuff works. So essentially, that's your single point of failure. And a theory I've been working to is that Ethereum, and Bitcoiners won't kind of agree with this, but I think Ethereum is too decentralized for what it's trying to do for that reason, right? Because it's over-designed something when your final, what is the actual weakest link? It's centralized stablecoins. So when I take a really big, honest look at what we've built over the last, 15 years, but 10 years of crypto, so to speak, we built Tether on Tron, which, by the way, is a fantastic product. I've personally never used it, or I think I've used it once or twice, but it's dollarizing the third world, which is incredible. That's between Binance and Tether, probably done more for the third world banking system than any technology that I'm aware of. It's been quite remarkable in that regard. And I know Nick Carter is, and Coinmetrics are doing a report soon that like really dives into the stablecoins. I'm really excited to read that because I think it's going to be quite eye-opening. So I think in the world of like, what do I think the value is? I mean, Bitcoin is pristine collateral. It's an obvious one. And we're seeing more and more institutions just being really honest and saying like, there's Bitcoin and there's everything else. And that is, in my opinion, the correct framework to think about this stuff. There is Bitcoin, there's everything else. What does Bitcoin need? Well, what it doesn't need is stablecoins built on top of it. It also probably doesn't need that many blockchains built on top of it. With all of its flaws and faults, Lightning, the thing I appreciate about it is that it's quite specifically not a blockchain. It is a different piece of technology that can infinitely scale. It's just got a slew of UX headaches and blah, blah, blah. But the point is it's not a blockchain. And that's the correct design framework, in my view, to scale this stuff. In terms of what comes to Bitcoin, I look at like, do I need some kind of L2 that I can not use the same way that I don't use Ethereum? Probably not. You know what I really want? The only thing, the killer product for me, the only thing I actually care about, I just want to borrow against it, but I don't particularly want to use some random protocol that like I'm one click away from getting rugged. What I would much like at the end of the day, honestly, banks aren't going anywhere. And I think that like that's part of the system. Part of the system is that banks are going to be part of our future because there's about 5% of the world who are ever going to use a hardware wallet at most. I just don't believe the average guy is ever going to do it. So as a result, they need those trusted intermediaries. It's just how the world's going to work. If I'm really realistic about this, it's how the world's going to work. I'd love to just be able to borrow against my Bitcoin and buy a house. That'd be great. And like, you know, multi-sig wallets, and there's all these different things where you have a key, the bank has a key, an insurance provider has a key. Fantastic. That's great. That's the killer product. Stablecoins on some kind of Tron-esque fast blockchain. Bitcoin is pristine collateral. Happy days. What else do you need? We've solved problems with finance. That's the mission.
Yeah, I think with regards to Lightning, it is cumbersome. There's also the development of Lightning is sort of weird. You have these like competing implementations, and you have, I certainly understand.
They call it client diversity.
Yeah, except with Lightning, it's like some people want to do this, some people want to do that, and some are very well funded, and they ship something that's not very good code, and then you have to get the other people working on the other thing to help integrate it. So, but yes, it like to your larger point here, which is that scaling blockchains with blockchains, it's interesting, right? Because like if you scale a blockchain with more global state, you're in effect, if you want to use this like trustlessly and like it with the same security guarantees, you need to run a node that now scales global state. And so I'm generally in agreement with this. I think that there's a lot of like discussion about L2s on Bitcoin, and there was like, we go through these cycles, right? Like we spend like 2 months on drive chains, and then, you know, we spend like a few months on rollups. Like it's interesting. It may be a solution. I don't know that like this is something to fork Bitcoin over. I've had a lot of discussions.
No, definitely not. What I will say though is Ethereum doesn't benefit from more Ethereums hanging off it. Bitcoin actually could benefit from I don't particularly see what that is, but just because Bitcoin will never do that stuff, having something that can do that stuff that's like directly attached to it, maybe there's something there. So it actually makes sense for Bitcoin to have some kind of smart contract chain hanging off it. It doesn't really make sense for the other chains to have smart contract chains hanging off it because they already are a smart contract chain.
Yeah, I mean, this is like, you know, Solana's like premise basically let's just keep scaling the chain. And
yeah, it is targeting the correct level of decentralization for moving stablecoins around the world.
Right.
Makes sense.
Exactly. Yeah. And at the end of the day, like stablecoins are always going to be beholden to who issues them, right? Like it's never going to really matter. Like in my opinion, right? And this is something that like a lot of the Ethereum people would disagree with me on, but like, I don't think it matters that much how decentralized the blockchain is if you're using USDC, right? Because the 100%. Government's always going to circle first, right? They're always going to blacklist those addresses first. So like, I've always agreed with this. And like, you know, Tron on USDT, like if people are like willing to use that, and it has, I mean, it's almost like it's a little bit of a slap in the face, I would say, to some extent, that Tron and USDT is like the killer use case thus far for, you know, blockchains, 100%. You know. But then like, so then I wonder like the long run of Bitcoin, is this just pristine collateral to you, or are we going to move into a world of, I don't know, hyper Bitcoinization?
No, I think pristine collateral is the right framework. I really do think that we're going to have and I think it's actually a better system. It's like a dual money system where you've got sound money and then as your savings vehicle, and then you've got cash that moves around. Now, what I think is interesting, and it's obvious, that's why I'm keen to read what Nick's and Coinmetrics paper is on, because when I think about Argentina was going through this whole political change with Milei. And the idea is that they wanted to dollarize, right, and get off the peso. That is, if you think about the order of magnitude between the Argentine peso and the US dollar, that's essentially like Americans going to gold or Bitcoin, like the delta between how shit the peso is versus the soundness. So we kind of get to see like a bit of a preview for what actually happens if you switch to a sound money standard, because it's sounder, right, on a relative basis. And I mean, I can only suspect, having thought about this problem a lot, I still think that the gold bugs are correct in the sense that sound money will improve the world. The difference is that they just happen to be holding the wrong asset, in my view, which must be very, very painful. Ethereans probably know what that feels like. So it's one of these like interesting dynamics where we're going to be able to see that movie. I agree that Tether on Tron is a real, it is a slap in the face. And something that I think is quite interesting is that, like, if you look at, again, what is the big difference? And again, I'm not deep in the weeds, so don't talk about technical stuff. But if I look at Solana, I look at Ethereum, Ethereum's design is really targeting an ideological framework. Everything comes from like a very, very ideological structure. And I listened to the debate between Anatoly and Justin Drake. And a word of advice for the Ethereum folks: Justin's not your best player. It's very, very hard to listen to that and take it seriously. My takeaway is that Solana is doing one thing. They're making a very fast order book. That's it. That's the design objective. If you can make a very fast order book, you enable assets to just move around. And given the fact that they're centralized anyway, that's the problem set. You've solved it. Done. That's the mission. But like having all these other ideological components, but if they freeze any of the stables, your protocol dies anyway, so it doesn't matter, right, at the end of the day. So it's one of these very interesting dynamics of like right solution, right problem, right time, right, use the right tool to solve the right job. And that's kind of how I see a lot of this stuff.
Yeah, and I can see like the long run where Solana is viable. I mean, I tend to agree that Solana, so first of all, stable coins are a massive, vector of attack to all of these chains, right? And if like the lowest common denominator on these chains are stable coins, like it's a problem. The thing is, so I tend to agree with that. I also think that, just my personal view, and I've been accused of being a Solana shill, which it's ironic because I don't think that the long run of Solana is exceptionally decentralized, but I don't think it's a bad thing. And I say it's not a bad thing because I just think that like if you can move stables very fast, like it's so obvious to me that like wire transfers should no longer exist. Like,
yeah, I fully agree with that.
It's kind of like you sending USDC on Solana is like so much better of an experience, right? I do think that when you have to make finance go really fast, it's always centralizing. And when it's finance, it's always centralized when you get like sophisticated entities. So it's not like I think that I think that somebody said this like very eloquently, and it's something I've thought about. But he's actually building something that kind of like does something with Bitcoin and Solana. And his point was like, and I said this before, is like you can use Solana as like a back end that takes away the regulatory aspect and the infrastructure aspect of doing something like Stripe, right? It is competing with Stripe and PayPal and these like centralized, payment services. And it does a very good job of that because you can just come and permissionlessly build whatever atop it. So like when it's said like that, I'm like, oh yeah, that makes sense. I do think that these like data centers get co-located around, the block builders who have the ability to reorder transactions. But it's like definitely.
I mean, that's essentially what happens in all MEV systems anyway. It's just more obfuscated. That's what I mean. Like it's hidden behind this ideology of, we're going to be more decentralized. But it's like, yeah, but you've got like two block builders and they're just super advanced guys. Like people co-locating is literally them just paying the two guys who can build blocks. That's the same thing.
So yeah, I want to pivot a little bit back to trading stuff, just because I have somebody here who can give good answers to this, and these aren't questions I usually get to ask. Okay, so like I'm obviously chronically on crypto Twitter, and I see all these people drawing lines on charts. I want to ask, like, what indicators, if you will, and you're gonna have to be like very, like ELI 5 here because I'm not gonna understand it anyways. But what indicators, when people draw lines on charts, are legitimate? And then I want you to follow up and maybe spend more time on like what do you see sometimes and you're like, this is absolute garbage and this is completely useless and you shouldn't even be sharing this. It's embarrassing.
Well, on that last point, one thing I find fascinating, I mean, I've been in the on-chain space for 5 or 6 years now. And the amount of people who, I mean, I've spoken to quants in the past, like guys who their job is to crunch big numbers in markets. And they push back and say there can't be any, I don't believe there's any value in this stuff. It's like, you're telling me that the database that is the asset you're trading, it is just a database. There's nothing in there that's useful. You're a numbers guy. Like, what are you talking about? Come on, of course there's something in there. Now, as with all things in life, it's not so much the indicator, it's how you use it. It's the analyst that matters a lot more than the tool. And I think something that, and many people who've tried to trade, you will have probably gone through this journey where you realize that you're not a good trader and you keep losing money. So you go Googling and you go looking for the best indicators, right? Top 5 indicators on Investopedia. And what you'll do is you'll start trying to apply them. And the problem is that you'll find that after your first 6 trades, it doesn't work. So you're like, oh, okay, that indicator's shit. I'll move on to the next one. But there's a reason why they're in the top 5. And it's not necessarily because you're good at it. It's because other people are good at it. So I think understanding which indicators matter comes down to what problem are you trying to solve and getting good at it, right? You have to, like everything, it's practice and you have to continually use them. So at the end of the day, there is edge in everything, but is it your edge? And I think that at the end of the day, you need to work out what you are good at using because, and that comes down to practice. Until you work out what you're good at, you'll never be good at any of them. So in terms of, from my experience, there's a handful of indicators that I use. I'll start with the technical side because I don't use a great deal of technical indicators, but I mostly use, I think I like to keep it really simple. There's basically 2 that I will actually refer to at any point in time. Probably 3. I just like channels. Bitcoin likes to trade in channels. We go like upper, mid, and lower, and it just kind of goes in these like bands. When you get to these channels, the reason why it's useful is people see it, same as a 200-day moving average. Why do people look at these things? Because it's really, really obvious, right? Big horizontal levels. Everyone's going to look at it and see it. So it's like when things are, what's the saying? In a sea of sand, a single flag becomes a target. When everybody's out there trying to find their way around, you see one flag over there in the distance, it's the 200-day. Every man and his dog on Twitter is talking about the 200-day moving average. We're probably going to the 200-day moving average because everyone can see it. It's like it's a self-fulfilling prophecy. So that's a big part of it. The other indicator I just Fibonacci levels, exactly the same reasoning. People, like human beings in our emotional state, what are markets and price? It's human greed and fear plotted over time. That's all it is. It's people getting blown up to the upside, to the downside, and using things like, for whatever reason, our brain chemistry is very like naturally wired, like mathematically wired. So Fibonacci numbers, I don't know why, but human beings respond to them, whether we know it or not. It's why price charts look the same back in the 1920s as they look today, because our human ape brain is 100,000-year-old hardware that's dealing with the same problem that it always has. So I think those kind of levels are areas where markets will usually be attracted to and find some kind of support and resistance. Now, the only other technical indicator, because they're kind of levels, the only technical indicator I actually looked at is a very strange one. It might be because it was designed by an Australian and I feel some national pride for it, but it's called the choppiness index. And it's essentially like a fuel gauge. So when the market trades and it like trends in a straight line, it uses up energy. It can't do that indefinitely. At some point, it has to correct, consolidate, and like just rework off the gains, digest the move. And the choppiness index basically just looks at how many of those candles over the last 14 days or 10 days, whatever you want to use, how many of those candles are in the same range, right? The more candles that are in the same range, you're consolidating or correcting and you're recharging the batteries. So that will give you a signal that says we're probably ready to trend. It's ready to move. When you go to very, very low levels, it means that the trend has fully exhausted itself. It's tired. It needs a break. It doesn't mean you're going to correct and sell off. And what I love about this metric, it's not directional. It doesn't tell you it's going up, down, left, or sideways. It doesn't say up or down. It does say sideways. So it will say, we're not going to keep going in this direction, but that doesn't mean the trend is over. So that is the only technical indicator I use because it helps me understand how much juice is in the tank. Now that's kind of the technical side. I'll pause there and see if you got any thoughts, but there's a whole, once I open the box of on-chain, that's a whole different animal.
Go ahead with the on-chain because honestly, most of that stuff did not really resonate with me. I'll have a look. I'll have a look as to what that stuff means. I'm obviously not a trader, as you can tell. But let's go into on-chain because this is what you focus on primarily anyhow, right? So give an overview and then go into it. Get on in there.
Yeah. So what drives investors and people to make decisions? Profit and loss, right? There's nothing quite like, and you've all experienced this. You've bought Bitcoin or you've bought any kind of asset, and within 30 seconds, it's immediately sold down 10%, instantaneously. And you hold it and you're like, okay, don't worry, it'll come back. And it goes down another 5, goes down another 5. You're like, don't worry, it's going to come. And eventually it gets down 25%. You go, fuck this. And you sell. And then, of course, the moment you sell, it goes right back to your original cost basis. So what you've done, you've bought high, sold low, and you probably buy back at your cost basis again. You buy high again, then you sell low again. It is very, very natural. I'm sure everyone listening to this, if you've traded at all, you've probably experienced that more than once. That is you buying some other guy's coin who was locking in a profit, right? You then carried what I call an unrealized loss, right? So your portfolio is red, but it's a paper loss for now. The paper pain gets so bad that you eventually capitulate and you sell and you lock in, you realize that loss. But because you're measuring where the price is relative to your cost basis. Ultimately, that's what on-chain data is so powerful for, those dynamics. So you'll see things like there's basically 2 or 3 metrics that are really, really at the foundational level of all this. Cost basis. You can see where the average cost basis is for the whole market. For what we call short-term holders, people who recently bought, they're the most likely to respond and panic sell and panic buy. So short-term holders and then long-term holders, the people who've been around long enough that they kind of know what they're doing. They've held their coins for at least 5 months. So I can see the cost basis of those different cohorts and I can see where price is relative to those. So if you take a ratio between price and the cost basis, it's essentially how in the money or out of the money they are on average. That's called the MVRV ratio. That's literally showing you how much euphoria. If everyone's seeing a really fat green in their portfolio and they've bought and they're up 200%, MVRV is going to be very high. What does that tell you? There's a bunch of people who are getting a bit trigger happy going, ooh, my portfolio is really up. It's probably time for me to sell, right? So it's like an incentive. Likewise, when it's very low, there's lots of people who are on the edge, I can't carry this loss anymore. I got to take this L. So MVRV tells you how much of that incentive is in the market. And then its cousin, its sister metric, that's the coins they hold. There's another one called SOPA, and that's the coins they spend. That's what you print when you buy. You hold it all the way down to a lower level, and then you capitulate and you go, I can't do this anymore. I'm out. This position's going to 0. And of course, it doesn't go to 0. Your sell was almost always going to be at the same point of seller exhaustion, and that's when it bounces. So SOPA tells you when people take fat L's, when they take lots of profit, and all of these things helps you position, right? I don't want to buy my coins when a bunch of guys who've been here for 2 years are selling en masse and taking fat profits. Probably not a good time to step in because they're saturating the market with supply. What is a really good time to buy is when all the people who didn't listen to that advice bought very high, wait for them to sell low. That's the dip. That's when you step in. So that's kind of the framework that I use, and they're super, super powerful. They're actually quite simple. Once you kind of wrap your head around those mechanics of what's really going on, they're actually really easy to apply. But at the end of the day, you're looking for people to buy high and sell low and do the exact opposite.
Okay. Give us some bullish takes. Are nation states going to, or are they currently buying our coins or pumping the price of our coins that we currently hold?
Well, I don't think Germany's pumping the price at the moment. I think they're doing a pretty good job to.
Yeah, they're actually disappointing us greatly. But
yeah. I mean, we'll see how that plays out for them. But look, in terms of the nation state thing, I think that's. I mean, I'm not. Yeah, I mean, I don't think El Salvador is going to move the needle.
No.
It's good. I mean, it's a sound money policy. It's net better than where they were, right? At the end of the day, at least they have assets which are now, up on their position. So that's good. I'm not really a fan. Like, even like, there's a whole lot of stuff going on in the political world at the moment, right? Trump's speaking it. I mean, I'm going to the Nashville conference. So I'm excited to see the circus, but at the same time, like, I mean, don't trust politicians as far as you can throw them. So there's that whole element as well. I'm not overly bullish on, like, in the next 3 years, we're going to find out that, some country is putting Bitcoin on their balance sheet in size, right? They're going to continue to stick with gold for a long, long time. But what I have had this theory of is Bitcoin is obviously integrating itself with the energy grid, whether I'm actually in Texas at the moment. They've integrated here in Texas, which is incredible. That's probably the most exciting thing. That's like improving energy infrastructure. That's massive. I think that's going to start with energy companies. And countries really are learning about energy security now. I think that's a big theme. So if you kind of glue nation state energy security with Bitcoin's actually improving our energy security, the next step is just not being hostile to it. Let's start there. Let's start with countries not being so hostile to it first. But I can't help but feel that there'll be some energy companies who have just a little liquid layer of Bitcoin on their balance sheet. Right? If you think about a central bank, even they've got all this gold. Gold's a real pain in the ass to ship. It's a real pain there. You need warships. It's just a whole mess. If you're moving gold around to pain, what if you just needed to settle $1 billion? I mean, Bitcoin will do that in 10 minutes. So you may settle $50 billion once every 6 months with a shipment of gold. Cool. But in the meantime, I need to settle 100 million. I need to sell 200 million. I need to buy X amount of oil from these oil producers. Oh, by the way, they also mine Bitcoin with like flared methane and all this stuff. So I think there will be some of that stuff happening around the edges. It will probably happen like in the Middle East or Latin America or something like that. It will start there. It won't start in the Western world, I don't think. But I do believe there is a case for it to be made. However, I am certainly not like banking on the ECB buying Bitcoin to pump my bags. This is not part of my long-term thesis. That's another thing that people are too bearish on. We're pretty much at all-time high, right? We hit a new all-time high. And even the ETFs are mostly retail. So we haven't even seen big money really coming to the fore yet. And yet we're at all-time high and people are bearish. To me, I find that quite interesting.
Yeah. How closely do you follow miners and what they do with their coins? And one other thing, like how big of a role do you think this plays in like overall market dynamics?
Yeah, so I did a study on this a couple of weeks back called "Are the miners suppressing the price?" Because and I have this line. I love seeing the narratives on Twitter just not playing out in the data because it happens all the time, and everyone's banging on about miners and miner capitulation. So I went and looked at their balances and how much they're selling. Miners always sell. Their job is to sell. That's what they do. So like. People who are like, now, true, they do have treasuries and they do liquidate them at certain times. But when you measure the amount of coins that are being issued to miners and their sell side, if you squint hard enough, you might see it. You might see this tiny little line down the bottom of the chart when you compare it to trade volume, to open interest, to choose your metric, sell side from long-term holders, ETF flows, whatever it is. If you squint hard enough, you might see something like just popping off the zero line. Miners are so irrelevant in terms of their scale and size. And when everyone was saying, oh no, the miners are selling, strange enough, the miners actually did sell about a month before that narrative was on Twitter. So it happened, but long before people are talking about it. So they're just looking for a reason why the price isn't going up.
Yeah. And like, this has always been an interesting difference, I think, in thought. Maybe I see this with Ethereum, right? Like there's this notion that like, there's not this sell pressure.
How'd that go for them?
Well, I found it interesting because like, as you know, like it is good to distribute the coins, right? Like
Absolutely.
They are performing a service and then they sell them in order to maintain a viable business, right? Like, and this is like how Bitcoin is designed. And so when everyone's saying like miner sell pressure, I'm like, yeah, this is a good thing, right? Like
it is.
This is how you get the coins out into the market. And as we saw last cycle, a lot of the miners who did try to hodl, they get wrecked, right? Like they take on all this leverage for machines, then they stack their treasury with Bitcoin, and then they borrow against the Bitcoin to buy more miners, and then the market tanks and they get licked on what is effectively like convoluted leverage, right?
Yep.
So yeah, it's interesting. Like, do you have any what do you see going forward in terms of, just like kind of curious about this? What do you see going forward in terms of like how miners balance holding versus selling? Like, what are your thoughts? Like, do you think we start to see miners increasingly denominate in Bitcoin? I mean, like I said, like, last cycle it didn't work out so well, but maybe going forward, what are your thoughts on that?
Yeah, no, I've spent a bit of time thinking about this, and on the Ethereum side as well. What I never quite understood is most of them, and rightfully so, were like, proof of work was very good for our early distribution, right? And that was a good thing. Why in 2022? Why in 2022 is that not still useful? That's the thing I could never get my head around. It's like, isn't that always going to be useful to have distribution? Like, why? Surely, if you remove that thing, all the benefits of the distribution is going to go away, right? Like that's what proof of stake is. It's going to continue to centralize. So I never quite understood that divergence in the narrative.
Yeah, I think it is an interesting one. I guess the rationale is that the coins were fairly well distributed up to that point. And, I will say this.
Which I think is the problem, right? It's like, basically, let's give all the insiders the money and then we'll turn off the tap so then everyone who comes in later can suck eggs.
Yeah, I mean, okay, your words, not mine. I have to be a little bit more conscientious with my. I have to like plead the fifth on this one, but I will. Yeah, generally agree. Like, I think all the coins are now distributed, right? So like that was the rationale, and then the other side is like, well, then now there's no sell pressure, so then it more closely incentivizes users and holders, right? But like what we see is people sort of sitting on their stack as a result, right? So yeah, I mean,
and users migrating,
right? Yeah. So no, I'm generally agreeing with that. But anyway, sorry, go on.
Sorry, on the Bitcoin side. So there's always this narrative of the mining industry is like, it's under stress and the security budget, and oh no, Bitcoin's not going to be sustainable. And one of my colleagues at Glassnode had this. He wrote a piece that was looking at the hash rate being at the all-time high, and it's at the all-time high every single halving. I was like, that's very interesting, because obviously the halving is where you're literally going to get 50% of your main source of income slashed. So why on earth is there an all-time high in hash rate at every halving? Now, I spent some time thinking about this. Like, how does hash rate go up? There's only two ways that hash rate can truly go up. More rigs, which is CapEx, or more efficient rigs, which is R&D, which is also CapEx. So what would a mining industry that in aggregate is completely and utterly stressed, right, trying to rub two pennies together, what does that industry look like? There's no new hash rate, because they're only using the coins and the income they have to keep their existing machines running. They're not investing in R&D. They're not buying more rigs. Bitmain's going out of business. None of these things are happening. So that means that in the income stream, there is enough to run the current machines, but there's also cream on top to invest in the future. So until that cream is consumed, hash rate will continue to climb, and that tells you the mining industry is not stressed, essentially. But another element to that is that there is the Bitcoin mining industry as a whole, and that can go through periods of stress, booming, and busting. But there's also an individual balance sheet. Each individual miner has their own situation within that. Like, there's good miners, strong miners, and weak miners. And this is something I think a lot of people miss. Let's imagine that a bunch of miners individually go bankrupt. What happens there? They will sell their rigs that they acquired at a high price, at a high cost basis. This is why, like, miners have an on-chain cost base as well, but for their machines. If they bought their machines high and they go bankrupt, they will sell their machines low to somebody else with a better balance sheet. So once they own those machines, I mean, imagine if the latest mining rig was selling for $5 a piece. Someone's going to buy them and they're going to mine them because their CapEx is zero. So the rigs will actually decline in price until they've got their own difficulty adjustment. It's called bankruptcy. So you've got you've got a difficulty adjustment on the OPEX and you've got a difficulty adjustment on the CapEx. And both of those two things will mean that individual miners will burn and turn and churn all the time. But the aggregate mining industry, there is no security budget problem because some other guy will just come in and buy those machines, right? The security budget, really, at the end of the day, what is the security budget? You just don't want that buyer to be a nation state. That's it. That's essentially the game theory. If the nation state is the one buying those rigs, well, even then, what happens if you get nation states on two sides of the world that don't like each other buying the rigs? Then you've got the same exact dynamic. So I can't help but think that big miners are destined to go bankrupt because they get to economies of scale. If any of you have worked in a big company versus a small company, big companies get so much inertia that they can't turn around and adapt. Small companies and small entrepreneurs can. And because Bitcoin mining is such a ruthless and cutthroat free market, the small entrepreneurs who can run a single container off a waterfall in Africa, they're going to be way more nimble and way more easy to buy and sell their rigs and get them at a good cost basis. They're going to be the ones that actually, I think mining naturally decentralizes by that regard as well.
I couldn't agree more. I've always thought this mining get pushed to the edges, right? And
yes,
there's this concern about mining centralization, and the reality is these massive miners aren't going to some stranded energy source in Ethiopia. You know what I mean? It's always going to be some, like you said, small nimble miner, and this is a self-correcting market anyhow, right? And I completely agree. I think actually my friend Alex B, if I recall, he wrote a piece that basically said exactly what you said, which is that if mining could be theoretically decentralized with just China and the US mining.
Yeah.
Right.
Yeah, they don't like each other. Bitcoin's for enemies.
Exactly. Right. Exactly. So, and then the whole security budget thing is it's almost a bizarre circular argument in my mind, because it's what you're saying is that there won't be demand for Bitcoin block space by saying that the security budget won't be sufficient. And if we get to that point, then okay, Bitcoin failed. You know what I mean? There's a lot of
it's binary.
Yeah. There's a very simple approach to this, which is if transactions are not secure, right, and are not being confirmed consistently in blocks, then okay, then we failed to integrate Bitcoin into the real world, right? It's purely a demand for Bitcoin block space. If it's not there, it's not there. I think the long run of Bitcoin mining too is, and this is a sort of a very, I think I heard this first from Troy Cross. And when I started thinking about this, I was that actually makes a lot of sense. Bitcoin miners in the long run may very well not be mining companies first and foremost, right? You were talking about the energy integration, it's much more likely, in my opinion, that they are using Bitcoin mining as a way to balance what their real business is, right? So energy producers, or you're building,
it's going to be behind the grid.
Exactly. And so because Bitcoin's so nimble in the sense that you can just turn on and off these ASICs. And I mean, this is happening right now. I don't really know the unit economics of this stuff that I see, Grid, this company in Africa that's doing these hydroelectric stuff or whatever Gridless. It is. Yeah. Okay. So yeah, Gridless. So this stuff is in my mind, it's dude, this is incredible. I don't know exactly, right? I haven't seen their balance sheet. I don't know how well this works in practice right now, but the long run of this intuitively, and especially, the Bitcoin price keeps going up, this is the long run of mining to me too. So yeah, I've always thought the security budget was propaganda push.
Oh, actually, I remember what I was going to say before. On the security budget topic, there's obviously two components. There's fees and there's the subsidy. And something I've been mulling over is the subsidy is paying for the CapEx. The subsidy is there to buy the ASICs in the first place, right? Get the hardware out there and constructed and built. A lot of people miss this, and I think Eric Voskuil's done a fantastic job. I mean, it's a complex book, but that's that's super nuanced. Yeah, I tried to read it.
It's impossible to read because it's all blurbs. It's a book of blurbs. It's a bunch of random thoughts, and they're not sequential at all, and they don't follow any type of logical order. It's just
but it's also
number two. It's also brilliant though. Yeah.
I was going to say, when you're doing work and you've got A time and B time. Your A time is when you're switched on in the zone, and then your B time is I'm answering emails. Every single word is A time, and it's just hard. It's hard to get through. But he's got this great point, which is that the fees, because if you're a 51% attack miner, you also get the subsidy. So you also get paid that subsidy. Everyone gets paid the subsidy. So the subsidy actually doesn't keep Bitcoin censorship resistant. The fees do. Because the fees are the only thing that if you decide to censor the network, you won't collect the fees because you're not confirming transactions. So the fee pressure will build up, and then it's more profitable to outcompete the censor, right? So the fees are actually the only thing that keeps Bitcoin censorship resistant. And a lot of people are but the security budget's going down. It's but the security budget isn't the thing, that the subsidy isn't the thing that's keeping it secure in the first place.
Great points. Okay, a couple last thoughts. just, okay, what are your ideological thoughts on a bunch of Bitcoin ending up in these ETFs? Like, does this concern you at all? How much are in the ETFs now? Like, is it like close to 1 million, right?
It's over 1 million.
Yeah,
it's
so
over
there's
1
more
million.
than Satoshi's coins. Like, what are your thoughts? Like, does this ever come out? You know what I mean? It's stuck there basically, right?
Yeah, good question. Yeah, so I like Lynn Alden's framing where she's like, the ETFs are a TradFi API into Bitcoin. I think it's a really good way to think about it. There's a bunch of analysts who are out there like, oh, look, the ETFs have captured Bitcoin. Well, I did a study a little while back that looked at how much, if you look at hodler behavior, like the classic Bitcoin pre-ETF, all their sell side and buy side and whatever's going on. And I compared that to the ETFs. And the ETFs, even GBTC, the outflows from GBTC were like 20% of the sell side on the run up. The other 80% came from the hodlers. So the hodlers still dominate this market. They are still, 4 times larger than the ETFs. And everyone's like, look, the ETFs are like, driving everything. It's like, well, if you squint hard enough, you can see them on the chart that shows like full scale demand. They're a small component in the whole thing. So I think, and of course, that's a assessment as it stands today. I don't know if these coins will stay in there. I'd say a big chunk of them will. But I also think that there's going to be a lot of coins that circulate outside them, right? I think, it's very early to be saying, oh, all the coins are going to end up in the ETF. It's like, well, some of them will. But we have actually seen this movie and the market impact of ETFs, I think, and I've been, it's a bit of a stretch, but I think 4 times in the past. Because what are ETFs? They are essentially a bucket that coins go in and they trade around on the inside. That's kind of what they are, right? For some reason, they trade around the inside. When have we seen this dynamic before? Well, we saw it in 2017 when exchanges and Binance launched. Bitcoin goes in and they trade around as the denominator on shitcoins and everything else. That's the same dynamic. It's a big sink for coins to come in. Now, granted, there's price discovery, but there's price discovery in the ETFs as well. The next one was the plus token Ponzi in 2019. A big pool that coins just got sucked into, 2% of the supply, and they trade around the inside. You then got the GBTC in 2021, where the coins went in and they trade around on the inside. And here we are with the ETFs. We've got the exact same thing. So in a way, we've essentially seen this movie 4 times in the past, or 3 times in the past, 4 now. So, I don't think that, coins are always going to end up in there. This is just the natural progression, right? It's like people who are like, oh, these damn people shorting it on futures. It's like, guys, every asset that's worth anything has a futures market. Get used to it. This is just how the world works. There are always going to be derivatives. Derivatives allow institutions to hedge their positions. They can't buy the spot unless they have the futures anyway, or the options. So it's one of these dynamics where it's like, this is just how the world ticks over. Can you still send Bitcoin from me to you? Yes. Then what's the problem? That's the mission, right? What we actually have to be concerned about is threats to self-custody, because at the end of the day, why did gold get wrecked? It's because you could never call the bluff, right? You can't call the bluff. Even today, gold bugs will still have their gold bars custodied somewhere. So for me personally, I'm quite happy holding the ETF. Would I tell, self-custody coins? Most people probably aren't going to use a ledger. It's just probably not going to happen. I know that we should encourage it, but also a lot of people are just simply never going to get there, right? It's just you have to just accept that that's part of the way the world works. And having client diversity, whether it's ETFs or self-custody wallets or whatever you want, all these things are just part of the process. So I'm not concerned about it. I think it's one of those things where if you try and fight the tide, you'll end up drowning because the tide just is. It's just part of the natural dynamics of things. But no, I don't think 1 million coins is fully captured. I mean, one of the bigger risks, however, is probably Coinbase being just a single pot, right? They've got, I don't know what it is, 2 million or 2.5 million coins, stacks of them in custody, plus the ETFs. It's a huge pool. Now, granted, I'm sure they have the absolute world's best in security, but that's a huge risk. That's something that should be considered as a very meaningful left tail event.
We got an Ethereum ETF coming up. What are your thoughts?
Yeah, I mean, I think people are going to be a bit disappointed. Look, it'll get flows, but I mean, if we get anywhere close to the market cap parity, was it 20% something? That would be. I'd be surprised if they kind of got too much higher than that. I mean, if you think about it from just a standpoint, and I've heard people talk about this as well, the demand for Ethereum is substantially less than Bitcoin, which is okay. That's just, that doesn't surprise people. They've only just got their head around Bitcoin isn't a scam. Like we're very early in them even understanding any of this stuff. If you've got ETH in an ETF, It's not staking, so it is strictly getting diluted. It is strictly a worse product than holding, ETH, because you've also got a fee. So it's worse than spot ETH. It's worse than staked ETH. And sure, there'll be staking ETFs that come out. They'll probably have a lot more success if they ever get past security hurdles and all the rest of it. But essentially, you've got this scenario where like you're not really benefiting from holding it, and you also can't use it in any, they're trying to pitch it as like it's the App Store, right? Buy the App Store. It's like, but you can't use any of the apps. You're in the ETF. Like the App Store is the same as the App Store for Bitcoin, which is they want to borrow against it in their margin account. That's the App Store. So why would I own Ethereum when I can do that with Bitcoin, right? Because Ethereum, yes, it goes up more, but it goes down more as well. It's more volatile. I don't want my collateral that I'm using in a margin loan to be that volatile. And Bitcoin's volatility is massively compressed, which of course comes with lower gains and blah, blah, but it's also a very healthy, stable uptrend. So you kind of look at all these dynamics. I'm like, I can't quite see I don't think it's going to outperform Bitcoin, put it that way.
I don't know. I don't want to become like a, trading predictor show, but give us some like thoughts for the next 6 to 12 months. Like, are you optimistic? Like what is your little bit longer time frame outlook?
Yeah, so I'm extremely optimistic. I think Bitcoin's in a fantastic position. I think when you look at just I think Joe Consorti put out a great tweet yesterday. I'm going to get the numbers wrong, so forgive me, but he essentially, like, if you got paid $1 million a day from the day that Jesus Christ was born, essentially you're still only like 85% of the amount of money the US government has spent in debt or added to their debt pile this year. So, you just look at these numbers, it's like, this is insane. And I look at the political environment, it's like, guys, they're going to spend the money. They're going to print the money. So essentially, I'm a big advocate for, time in the market, but the idea is like, just be there when it happens, because, there's petrol all over the floor in this house. There's a bunch of kids running around with matches. At some point, the match is going to land. And the problem is that once the house is burning, you can't buy the insurance. It's too late. It's going to just happen. It's going to be a process. But like at the end of the day, being there for when this happens is what you want to do, right? You don't want to be sitting there holding a massive bag of fiat when you get, wiped out. Now, at the same time, in the near term, we got some headwinds. We got these big sellers that are going on. I still think that the Bitcoin's held up remarkably well, so it keeps me quite optimistic. I wouldn't be surprised if we actually had it a bit lower in the immediate term, just because I think there's some of these supply headwinds, and we haven't seen that like next influx of demand. There's also like relative trade where like every man and his dog's buying Nvidia instead of Bitcoin. So there's a certain amount of liquidity that's currently sloshing around trying to find a home, but over any kind of meaningful time frame, they're going to print the money, and it's going to get worse and worse and worse. The political environment is such that, and I've been saying this for a long time now, probably about 12 months. We left the era of the central banker, right? Jay Powell doesn't have anywhere near the same role that he did with getting rates higher. Even if they drop rates, I wouldn't be surprised if that's actually a bearish signal because it's weakness in the economy and blah, blah, blah. I think the age of the central banker is over. They've been tapped on the shoulder, and we have now entered the age of the politician. And I use the meme for this, in Lord of the Rings, it's like that orc is like, the age of men is over. I use that meme to be like, the age of the politician is here. And I think that's where we're at, right? And who knows how long that goes for, but it's not going to be short. It's going to be several years. Okay,
that was bullish. That was a great way to end. Thank you so much for coming on. I thought that we got through a lot of stuff, and
rustle some feathers.
Yeah. Definitely ruffle some feathers, but as to be expected. So, thank you so much for coming on. I thought it was awesome.
Man, it's been a pleasure. Thanks for having me on.